everyone. I'm Blaine. Welcome to the Place Your Trades Network. We are the network that focuses on trading daily options using CME Group's event contracts to trade E-mini S&P, NASDAQ, Dow, Russell 2000, gold, silver, euro, crude oil, natty gas, and copper. Today, we have a great show for you with my fantastic friend, Shark. I'm sure you've seen us together before. We've done a ton of interviews, and I'm just so lucky to call him a friend. Today's broadcast is brought to you by Tradeovate, which has built a custom app dedicated to trading CME Group's event contracts. This is what we're all using at Place Your Trades. Shark, hi.
Hello, we meet again.
I'm a little frazzled today for a couple of reasons. First of all, my computer did a forced restart, which I never like going into a show. Also, I'm trying to force the market into a downtrend day. And it's not taking as well as I would like, but I don't think there's a chance.
Yeah. I mean, it's definitely, it was definitely my thought too. We were so extended to the upside and we're coming into FOMC. It seems to be working a little bit, but we're just kind of sitting around flat now. So we'll have to see how the day develops.
We like to call it a trendy.
I know that's what it seems like we might be, but we were in a trendy all night, so I don't know. It's definitely a tricky call right now.
We love it trendy though.
Oh yeah, of course.
Yeah, of course, yes. How are you? You're down in Florida, just doing. Do you have a full setup or a temp setup?
No. I have a temporary, just one screen. I don't have my normal 3 screens like up north.
Lord.
But I'm making do, and yeah, it's been good. I'm enjoying the weather. I'm glad to be away from the cold for now, but it's starting to warm up slowly. So, my time to migrate back up north. Maybe.
Oh, really?
Oh, yeah, probably.
You love New York.
No, of course. You love when we're on the phone and there's a garbage truck going by and you have to hear all those noises.
Of course, it's all part of the New York experience. There's a song that I put on my Traders playlist, which if you guys haven't gotten the Traders playlist, they're very good. On the first one, there's a song called New York Groove. That's I think it's by
What's
Kiss.
The band? Oh, yeah. Okay.
And Quinn, my daughter, we play it in the car, and then the rest of the day, she's like, New York Groove. So there were a couple of things I wanted to talk about. I think first we start off with the most important, which is your love for a Chili's margarita. Talk to me about this.
Oh, this is the most important. This is the topic at hand. Well, yeah, not only do I love the margarita, but they got great chips and salsa, and after a long day, trading, sometimes you just need to get that chips and salsa and a marg and just relax. It's definitely an interesting environment. It's definitely different than getting a margarita in New York.
Sure. Are you a cheese dip guy or no?
Oh yeah, of course.
Very big in the South. Yeah. Okay.
Oh yeah.
Do you prefer a queso or a salsa?
Oh, that's a good question. Depends on my mood, I think, and also too, if it's hot out, you want something refreshing, so you got to go with like the salsa. It's a little chillier, then you go with the, kind of a nice, more like savory, warm cheese.
I like that logic. Well, this is my new show called The Intermediate Trader.
Yes, I've been seeing stuff all about it. Congratulations.
Yes, thank you. And sort of the theme of this show is you're past the beginning stages, but you're not like an expert yet. So you've gained a little momentum. You're maybe like 2 to 3 years into it. And you have had such an interesting perspective over my own trading career and just the ups and downs, which on Twitter, I try as hard as I can to be positive. Sometimes things will hit really hard and I'm not always positive, but I always do try to put a positive spin on it, which is actually different than the things you've heard from me personally, where I really have a lot of breakdowns and self-doubt. All of the kind of things that come along with being a trader. But we've really been on a journey through my emotions that way.
Yeah. No, I think this is a great idea for a show. It's kind of a void, I think, in the space because so many shows are just talking about really from a beginner's perspective. And then you've got maybe really advanced stuff that might be over certain people's heads, or stuff they won't be able to relate to until they've had really some time, a long time in the experience. And I think that the 2 or 3 year range is kind of a really good, I guess, sector, to use a market term, because so many of the people are at that stage now. If they've survived, they started in COVID, if they're still in the game, this is where they are. And they're kind of in that in-between spot, like you said. And it's great that you have a voice and, kind of addressing some of those topics that might be pertinent to them.
It's so interesting how nobody, or I don't think anybody is just born being a good trader. I guess there are like market savants or something, but it seems
he's blind, but he can still trade the market perfectly, right? Like
yeah.
the Who.
It seems few and far between that you get like a very young, incredible trader. And I think it's because you play guitar. Here's an analogy for you. I think of it like when you first start playing guitar and you're like, fingertips hurt, and then the more and more that you play, you get the calluses, and then you get the more calluses, and then you don't even feel it anymore. It seems to me like you have to go through that pain of building up those calluses in order to do it at any kind of like professional type level. And I'm not sure how someone just comes into the market and just is able to trade and navigate those emotions without having any kind of callus built up.
Yeah, that's a great analogy. And anyone that's been in the market for any amount of time could certainly say that they've got their calluses or battle scars, so to speak, as they go along their journey. But you're totally right. Great traders aren't born, they're made. And they're made through that adversity. They're made through that time in the market, being in a trade, interacting with it. And there's no other substitute for that. And I think that a lot of people think that they should just be perfect or better than they should be. I also like to make the analogy, if you were a baby or just someone just born, and putting that, because when you get in the market, basically you're just a newborn. At 2 years old, at 3 years old, what are you doing as a kid? You're still drooling on yourself. And I think that's the biggest thing, even though I think it's great that people that have got that far are still in the game, but also at the same time, that same thing as the beginning traders, as far as not being, also remembering not to be too hard on yourself. You're still just a little kid.
For sure. I'm looking here on the Trade of 8 app, and it looks like I might be getting stopped out of my puts right about here. This market's not my favorite. Straight line days they're not really good for me.
Oh, those are your trendies. I mean, well, it's interesting. It's a tough spot right here. According to this, it looks like a straight line.
So you have been on this network a few times, and so you know a little bit about event contracts. And this is, of course, the Trade of 8 web app that I'm using, that I've got up here. And we like to think of these event contracts as callus builders. You're in the market, you're sort of learning your craft, but you only have as much risk as you want to put in the market. So right now it looks like the at the money ES strike is 40.10. And if you buy ES, that's $12. And then if you're correct, meaning that, well, you can scale out of it, but if you're correct, meaning that the price settles above 410, then the payout is $20. So
yeah, I love that.
Yeah. And there is a very good like risk to reward there. Of course, if it ends below, then you lose your initial capital that you put in. So you're not going negative. It's not like you're short selling something where you can lose more capital than you put in, which is my favorite type of trade. And I like that also from an options perspective, is that there is a bottom, It's been interesting, and it's been a nice glimpse into the futures market, which I really didn't know anything about prior to these event contracts.
I know sometimes now, when we talk, you say something like, oh yeah, I was looking at ES, 39.80 or something like that. I'm like, what talk to me in SPY. But now I'm getting more into talk to me in SPY. But now I'm getting more familiar. I've been trading a bit of futures now. So now we can talk our ES levels.
So you've been getting into futures. Tell me how that journey has gone from options trading to futures trading.
Well, I'm certainly enjoying not dealing with the theta, and I think that that's a great advantage of the event contracts as well, because it's kind of like that hybrid between options and futures, which is great. And I've been liking it. It's a lot more, I guess, linear, just in the fact that, you're just focusing on one thing. I mean, when I was doing the options, I was mostly trading SPY anyway, so pretty familiar with how that moved. But of course, futures a little bit different. I've only been really taking it seriously for about maybe a month and a half or so. So I'm still refining a little bit of the risk profile of what I'm comfortable with and what, my targets should be. But I went through that same kind of learning curve when I got into options, because I came from equities, and 7% on equities is a big loss, or 10%, but on options, that's in a blink of an eye, and the
Yep.
trade is still
Yep.
so I'm still getting used to, how many points or how many ticks do I want to risk per trade and stuff like that. But it's been great. I've been loving it, and it's been a great new step in my journey. And I think that, I know this is something that you wanted to touch on, I think that it's great to know the ES levels, because ES is based more off of SPX, which is like the real market. Buys, obviously, it's like the ETF. So when you're watching, like, say, CNBC or something, for example, you only see them talking about SPX. So I think that, like, the levels that come in when you're looking at ES or the NQ are a lot more kind of like true, for a lack of a better word. So I think that it's great to know both the levels, and that way, you can plan you can trade your SPY a lot with ES, which I think you wanted to tap on.
It's so interesting because when you and I went through and made my setup, I had SPY, QQQ, VIX, Apple, I think Microsoft, and then what was Lucid
Oh
or
yeah, you used
CCL, which
to
I
used to love
loved it.
yeah, Lucid
I
and
love
CCL. Those are
it.
your
Those were my
original. Those are your
babes.
first loves.
I
Yeah.
know, I know. And it's so interesting to me that I never had any futures on there. And why wouldn't I have, when it's just another, the word I love to use so much is confluence.
Mm.
And it seems to me like when the market is in confluence and the indices are going in the same direction, it's a better day to put on more size, which I think you and I differ a little bit in the amount of size we'll put on. But, you can feel a little bit better about the trade when the whole market is flowing in a similar direction. Those are my favorite days. In the last few days, there's not been confluence between ES, NASDAQ, and my gosh, I want to
IWM,
say
RWT.
IWM. Yep,
Yeah.
that is exactly. Thanks for that. And that makes it riskier to trade, maybe a better day to just stay out of the market. All things that I've just discovered on the journey that nobody really taught me, just things you kind of notice over time. And perhaps it would have been better if somebody had taught me that.
Yeah, I think that's a great point, and something maybe that I went through when I went kind of into my intermediate phase, because I wasn't necessarily looking at the overall market sentiment. And as I started to get more advanced, started looking more at, okay, I can see that we're moving up, but these 3 or 4 other sectors are really weak. So what's that going to do? It's going to put some push and pull in the market, and could lead to more choppy conditions overall, because you've got healthcare dropping, you've got tech dropping, but you have utilities and something else, metals going, or materials. And so you get this kind of hodgepodge type of situation. IWM's going down, the Dow is going up, Tech and QQs are going down, SPY's going up. So when that happens, just like you said, it can be a time to take risk off, to do less, and to take that step back and say, okay, maybe I want to get a little bit more in a scalp mindset, or it's not going to be a day where I can just ride a specific contract all day. I mean, I
God, but those
remember when
days
I
were the
first started.
best, aren't they? Aren't
But
they
they are,
just
yeah.
the best?
I mean, I didn't kind of get into that until I was like, year 2 or 3. I didn't kind of just pick it up on my own, kind of like you were saying.
Honestly, I wish that these event contracts had existed when I was starting. It's just such a great training tool. But then additionally, I do want to say, I think some people think kind of what's the point of taking this $11 trade? But this seems obvious, but of course, I mean, you can put as much capital in as you want, right? So
Yeah.
let's say you put 322, then you can see your potential profit here, which is still
Yeah.
a nice risk to reward. You don't just have to buy one contract. They're very similar to options in that way.
Yeah, and no theta.
No theta, and you can scale out. You do not have to wait until settlement.
Right, so you can day trade them.
You can day trade them. Yeah, well, you kind of have to day trade, right? They only last
right. Well,
day.
technically, yeah.
But yes, you can intraday trade them.
Right, exactly.
Yeah. Somebody on Twitter asked me if I would explain my trading process. So I trade the 30-second opening range, which gives Shark just a heart attack. He doesn't like to take a trade in the first 15 minutes, usually likes to wait the first 30. So we differ in that way. But I use the 30-second opening range, which Pax taught me. And Pax and I have a show on Friday if you are interested in learning more about the opening range.
Great show.
And then I just trade level to level. So I will put on a full size. And then if the trade goes my way, then I sell about a third of it and then put a stop above the entry. So there's no more risk. And then I'm able to say in my mind, like, this money actually isn't mine yet, right? The money that I've locked in is my money, but this money I have very little emotional attachment to. Either it grows or it stops me out, but it doesn't matter because I never owned that money, which is a very nice, like, mental place to be. And
yeah, I like that.
A lot of people will completely close out opening range trades when it reaches a certain significant level. I do not. I will be out, 80 to 85% of my initial position, and I will move my stop up to where I'm comfortable. But I like to believe in the possibility of a trend day. And it's actually been to my detriment almost every time. It's actually a weakness of mine that I like to believe that the market can move in a trend all day. And I think it would be better if I closed out upon reaching a level. But mentally, that's kind of a tricky game for me, especially when I started, because I had a cash account and I like trading. So you close out, you lock in your gains. It is a smart and healthy thing to do. But then I'd be like, oh, well, I'm done trading. So like, I'm going to give it the possibility that it gets through this level. And if it did get through that level and confirm over that level, I will oftentimes put on more capital to return it to my original size, and then it's like a whole new trade at that point, because then I get to believe that it's going to go up to the next level, when it could fail that level and come back and stop me out. But at that time, I'm already green.
Yeah. Exactly. I like, that's so important, moving up that stop so that no matter what, you do end green. I think the other thing is that, markets, like the norm for markets is consolidation. Those trend days are the rarities. So of course you want to, let the winners go for as long as you can, but it's more than often not going to be a trend day. And that's
unfortunately.
Unfortunately. But I mean, if there was, then everyone would be a millionaire and we'd be, everyone would be sitting on a yacht.
Another great thing about these event contracts is that you can I'll show you the strike list. You can do spreads. It's spreads, and there's another term.
Are you talking about a straddle? Straddle or strangle?
Strangled. Yes. There are a lot of different strategies you can use with the event contracts, and you could also use them as a hedge against your original position, especially on choppy days. That's so important, I feel, to hedge in what you're doing, especially if you're trading directionally, which is what I like to do.
Yeah.
So there's so many different ways to use the event contracts in your trading. Or if you want to learn a new skill, like, why not try here? I believe, paper trading, I actually have a fairly strong opinion that I think paper trading is worthless, which, don't come after me.
No, I mean, I understand why you're saying it. I totally get it.
Yeah. I just, like, unless it's your money going red, it just, trading without emotions is not trading to me.
Yeah.
So this allows you to have some capital in the game. It allows you to sort of test out your emotions while testing a new strategy, which I love.
Yeah, I think that's a great, it's a really low risk way to practice with actual capital in, like you're saying.
Yep, absolutely. The question that we get asked as a pair the most often is what is a whole wave? Of course, we get asked that because it's the only indicator on my chart, and you gave it to me. And I can never really answer the question of what a whole wave is because, honest to God, I don't know.
Oh, well, the one that we use, I mean, basically it is on everybody's brokerage. It should be just called the whole moving average. The one that we have is a little bit kind of tweaked in the formula, but it's just another mathematical calculation of the way that they calculate the moving averages, just a different one versus EMA, SMA, Hull. You have the Wilders, you have the weighted. I don't know. You've got a bunch of moving averages, and they're all based on different formulas mathematically, the way they calculate the line. The most basic one is on pretty much everyone's broker if they wanted to use it. I like it because it's a lot slower. It's a lot smoother. It seems to be, to me, it's kind of like a 20-day moving average, but on steroids. Like it's like a little bit stronger. Yeah, I'm not like a math or formula guy, so I couldn't really tell you, how it's calculated in comparison to a simple moving average, but that stuff is definitely out there. If you want to Google it and you're into that stuff, you can kind of see the formula differences. But
what I love so much about the whole wave is not only does it work on all time frames, which is lovely, but it's sort of like trading with a traffic light. You get it?
Yeah,
You
yeah.
get the joke?
The one that we have, it changes the color.
Yeah. So it's like green, red, and caution. So if you're on top of like a green, what looks like just an EMA, then that, the probability of it moving higher is fairly high versus, you can chop around a little in the yellow. And then, God, being under a red whole wave, does it get any better than that? I mean, it's
Well,
my
if you're
sweet
short,
spot. Of course. Yeah. That's my sweet spot in trading.
You're such a cheery person and have such a wonderful, bright personality. But yet, who knew that all you would love is just a big old bear flag in the market to crash down?
It's just my favorite. And I mean, I wonder if there was like a Rorschach test or whatever, like some psychological profile for what that means.
What do you see here? Or you'd be like, it's a bear flag.
Bear flag.
Red candles.
I'm sure whatever it says about my mentality is like truly deranged. So maybe I don't want to know.
There should be some Myers-Briggs or something for trade. I'm sure there is. Didn't Jared Tendler have a test like that, like a trading psychology test?
I think
he does. Do online?
I think he does. I've got his book right there, right somewhere. I could look,
but I'm pretty sure that there is something like out there like that you can do an actual profile. They ask you some questions and then it gives you some feedback on your strengths, weaknesses, and proclivities in the market, which is pretty cool.
What's interesting as well is you and I are both such like sensitive people, which as a trader, not a gift.
Right. Yeah.
Yeah, you don't want that. You want to really kill the sensitivity. But as a sensitive person, I don't know if you'll admit it, but I like to have some vibes in my trading, bit of a vibe trading, which there's no like calculated scientific way to be like, I just had a feeling. And
right.
Apparently it's a terrible way to trade, but it's just part of who I am. Just always going to be there.
Well, I'll say this about that. Like, when you're first starting, and I think this goes perfect into your show, and I'll segue into, as you get further in your development. But when you first start trading, your feelings, your thoughts, your vibes, all can deceive you. You can't say, oh, I think the market's going to reverse here, or I think the market is going, or I feel like this is the top. You need to have setups that you can clearly define and say, okay, I'm taking this because of reason A, B, C, D, whatever. But as you do progress in your journey, I do feel like that there is more of a sense of vibes, so to speak, in your trading. But it really, it really becomes down to your experience, because you have put in the time, you have put in the market hours where you've seen this particular scenario in the market maybe 25, 50, 100, 200 times. And for me in trading, intuition, I guess vibes, or if you want to call it intuition, feelings, is kind of a subconscious gross sum of all that experience that you've piled in your subconscious talking to you.
I
And
love that.
that's where it comes in, and that's only when you get to that 2, 3, 4, 5, 10 year, type of place in your journey. But when you're first starting, those feelings, those thoughts, you're a neophyte, you don't know anything. And once you build up that experience, then your intuition will speak to you through your past experiences.
A little story about that. Oliver, my son. I
Yeah.
believe you've
Yeah.
spoken to him on FaceTime or something before. He
Well,
is
he's read me
8
some great
now.
poetry before.
Yes. Yes, he has.
For his reading
Um,
project.
he is at a point in his sports career where he's been playing soccer and baseball 3 or 4 years now. Now he's only 8, but that's half his life, you
Right.
know. And all of his coaches are telling me right now that he is like an incredibly intuitive player. So he just, with soccer, he can like see 3 or 4 steps ahead and then place himself where the ball will be. So he's just kind of always open. And then he plays catcher in baseball, and he just like runs the field, right? He's just like a very intuitive player. And from what I heard, that gift is fairly uncommon, but a very strong gift to have. And it's interesting what you're saying about intuition in the market being the culmination of everything you've ever learned, because how much is it everything you've ever learned, and how much is it your style as a trader? I think it's a fascinating concept. I don't know the answer.
Yeah, yeah. I mean, certainly when you're talking about a kid, I mean, that could be a little bit different. I mean, everyone has, I think, different predispositions to intuition and kind of that thing. But yeah, I mean, some people might, in Oliver's case, he might be a little bit more attuned to that and might have a little bit more sensitivity. So that's, maybe like you. So that could be really exciting to see grow. But I think that it can use the sports analogy as well, for a football player that's seen, I don't know that much about like different plays, but like whatever, like a screen, something or other, and they've seen this type of play, or they reviewed the
The
Broncos
tape.
playbook, and
Yeah.
and they've seen them run this play, and then they're able to react to it live because they've watched so much. Same thing with any sports. It's definitely, the analogy's there for sure.
God, I love when an analogy works out. All right, Shark, what do you think the probability is that we get a new high of day here versus just chopping around in this range for the rest of the day? Like a new high of day and then a break of new high of day. I'd love
I
it to
mean,
happen, but
did you go long now? Did you flip out of your stroke?
I love to flip. Oh, got stopped out. I'll flip. Whew, don't do that.
What are the chances? I mean, you're catching me on FOMC day here. It's right before. It's a tough call. If
Wait, is
I had to
FOMC
pick,
today?
no, it's the meeting
Tomorrow?
starts today, but the data doesn't get released until tomorrow too.
Cool.
So
Cool.
they're
Way to
in
keep
they're
me on
in they're in
sketch.
their dark chambers now, plotting whether or not they're gonna load up calls or puts or before the meeting.
Sure.
Gosh, I mean, we'll just have to see. We'll have to see if this 396 can hold up on SPY. We're just so extended. We had that huge move after. It always makes me a bit nervous. The momentum seems to be with the market, but we could easily see that tentativeness, like you said. So we just might just chop around and could give everybody a headache. It might be a day not to do much more.
Yeah, I think I might head to the art studio and let the other people have fun in this chop fest.
Yeah, and let your intuition do some working. What color will be good for this painting?
Well, Sharky, as you know, I could just talk to you for hours. I hate to let you go. Just having such a nice time.
I know it's been too long, and so thank you so much to the Place Your Trades team and you for inviting me on and having me. It means a lot, and it's always great to catch up with you. And yeah, like I was saying on Twitter, it's been too long.
It has been too long.
I like how you called me out, and that my OCD wasn't going to let me have my original post with the 1 O on it.
With the 1 O, it's been
I was like,
O long.
Yeah, too long.
It's hard for me to really tolerate a grammatical mistake in a to or they, their, one of those, or you, your.
I know.
I can't really handle it. Before you could edit text messages, when you would send one and you'd be like, what did I do?
Yeah.
And you're just like, I obviously lost my brain for it. I didn't mean it. I know the difference. All right. guess I really
Well,
have to let you go.
I'm sure we'll speak soon. I hope you have a great rest of your day. Good time at the art studio.
All right. You too. Thank you so much.
All right. Bye bye.